Hi everyone, I'm Kathleen Brooks and I'm the Research Director at XTB UK. Welcome to our market update video. The S&P 500 in the US made a fresh record high at the start of this week, largely driven by big tech names like Nvidia and Microsoft. This week, we see the start of Q4 earnings season for big tech, which could be a make or break moment for the stock market, and traders don't want to miss these earnings reports. This week, the key reports to watch include Netflix, who kicked things off on Tuesday night, and Tesla, who will report earnings later this week. Next week, we get the big hitters with Microsoft, Meta, Apple, Amazon, and Alphabet. Netflix set the tone for earnings season, but Tesla is the main focus this week, as it's part of the Magnificent Seven tech giants. Analysts are expecting earnings per share of 76 cents, which is roughly $26 billion. Earnings per share is a key metric to watch, as it tells you how much money a company makes per share of all its stock. Usually, the higher the number, the more profitable the company. In Q3, earnings were weak due to a round of price cuts for some Tesla models that hit the company's profits. But there could be some better news in this report. There were record vehicle deliveries in Q4. Tesla delivered over 485,000 vehicles, which is up nearly 20% on the year before. Some analysts are worried that further steep discounts on vehicles sold outside the US could keep a lid on profits, and margins are expected to shrink to 18% from 25% a year ago. Analysts also want to know if Elon Musk has won the battle with the board to boost his stake in the company. If it looks like he hasn't, then he has threatened to walk. It'll be interesting to see if Musk's future is discussed on this earnings call. Now, Tesla's share price outlook is mixed. It's been one of the laggards in the Nasdaq and is down 16% so far in 2024. Even if it beats earnings estimates, it's hard to tell if the stock price will rally on the back of this report due to the concerns lingering in the background about competition in the EV space and also leadership worries. Overall, whether or not the recent rally in US blue chip stocks can continue could depend on the outcome of these tech earnings in the next couple of weeks. Earnings growth for the Magnificent Seven, the seven biggest tech firms in the US stock market, are expected to grow by 46% for Q4. That's lower than the 53% rate in Q3, but it still dwarfs most other S&P 500 sectors. The dominant growth is coming from these tech companies, and if they disappoint, then there's a real risk to the market. Thanks everyone for joining, and we hope to see you next time.